The big picture is very simple for me. There's no recession now. There's not one coming.
Your view, so one sec,
Yep.
because you've changed my mind on this, and it's yet to be proven. But you stopped me dead in my tracks when I was in your office. You said, "I don't think we can have a recession anymore," and it was one of those comments that sticks in your head. You go back, and I did a lot of thinking, a lot of writing, and a lot of work on it, and I came to the same conclusion under the current construct. I don't think we can have one outside of exogenous events.
In the last 24 hours, China announced a significant fiscal stimulus package to boost its flagging economy, which has been suffering from deflation and a property market crisis. The People's Bank of China unveiled a range of measures, including cutting the reserve requirement ratio for banks by 50 basis points, releasing over $142 billion for new lending. Additionally, the PBOC lowered interest rates on key lending facilities and introduced new tools to support the capital market. Following China's announcement of its fiscal stimulus measures, global markets reacted positively, seeing sharp rises across stock markets, commodities, and cryptocurrencies. In particular, Chinese equities surged, with both the Shanghai and Hong Kong stock indices closing up more than 4%, reflecting increased investor confidence that the economic measures would reignite growth. Commodities such as oil and industrial metals, which heavily depend on China's demand, also experienced upward price movements as expectations for improved economic activity grew. In the cryptocurrency market, assets like Bitcoin saw gains amid broader market optimism, driven by hopes that China's stimulus might increase global liquidity and risk appetite. In this engaging conversation between Raoul, renowned macroeconomic strategist and founder of Real Vision, and Jordi Visser, President and Chief Investment Officer of Weiss Multi-Strategy Advisors, the two delve into the transformative impact of AI, Bitcoin, and digital payments on the global economy. They challenge traditional economic thinking, arguing that we may never face a recession again under the current system, while exploring how exponential innovation is reshaping industries, investments, and personal wealth. With insights into how AI and blockchain technology are accelerating financial evolution, this chat provides viewers with a thought-provoking look at the future of money and the role of digital assets like Bitcoin in emerging markets. Powell and Visser's expertise shines as they explain why these shifts could fundamentally change the way we think about economic growth, personal finance, and technological disruption. Be sure to like, share, and subscribe for more in-depth discussions. And check out our other videos featuring industry leaders like Michael Saylor, Kathy Wood, and Lynn Alden.
One where we're just kind of in between two powerful forces, an industrial economy, which is less and less, a part of it, but where everyone was trained. So in sports analogies, I think people are still watching football games thinking of the rules that existed 20 years ago, and the rules have changed, so the game is faster. The way that the teams move their offenses is different. And I think just with AI and digital assets, it's made it very, very difficult for people to step outside of their comfort zone. They're scared. And probably the topic that we can now expand off of is that when things are in a linear world, stories become very important. They want stories of growth. They want stories that this is better than last year, or this quarter is better than last quarter. And the problem is with both artificial intelligence and with, let's just use Bitcoin because it's my focus and the one I like to talk about. There really is no story for Bitcoin that people embrace that are from the traditional world. So I just view it as we're in this point, unprecedented times, you call it, with exponential innovation moving at a fast pace, and our brains, from a biological perspective, are linear thinking, and they're trained in a linear thinking world. That the older you are, to steal Michael Saylor's quote, Bitcoin, you don't find Bitcoin, Bitcoin finds you. And the reason that's important is I think people have a hard time grasping on to what's happening in both AI and Bitcoin, and they just want to fade both of them. Why Bitcoin is so attractive. You were there way before me. The more time I spent on it, the more I just realized that the anger I was listening to and all the problems of the bottom 70% live paycheck to paycheck. There's more millionaires created inside Bitcoin every year than there is in the stock market, yet the stock market goes up a lot. Like,
Really? Is that the case?
Yeah, I mean, millionaires are being created in Bitcoin at an insane fast pace. And again, you and I have talked about how many owners there are in terms of wallets and how they kept growing. I'm actually astonished at how many macro people still either don't own it or say they've missed it. When I just sit there and I'm like, do you realize that we had a complete bear market, like a dot-com bubble that unwound in the crypto market, and Bitcoin made it to all-time highs while that other stuff is still sitting at zero, most of it. And yeah, there's Solana. Yes, there's Ethereum still. Yes, there's Cardano. There's some that have stayed around, but the majority of things within inside that ecosystem have stayed near zero. So you destroyed a lot of wealth. You took most celebrities down. You had bankruptcies, and yet it's still going higher. And that's where I get into the point of the emerging markets. And specifically, I think Malay's speech at Davos was a very important milestone in terms of getting people to focus on something that I saw happen. I'll fast forward a little bit to the Brazil thing, but this is what makes me interested to talk to people about crypto. Bitcoin's a hard story to give to Americans because there's other alternatives of what you can buy. You can go buy Nvidia, you can go buy the Qs, you can go buy whatever you want, and that stuff's going up. In countries like Argentina and Brazil, where you can't trust the bank, you can't trust the government, you can't trust the FX, well, they don't have another option. And that's where Malay was. And Argentina's got a rich history of being a place that's loaded with commodities, loaded with sophisticated commodity traders, but just hasn't been able to get out of its way. When I moved to Brazil in 1997, from 1986 to 1994, they had 5 currencies. So they constantly had to tell a story about what was happening. Bitcoin is happening, and it is a replacement for all people below the wealthy in their FX for exactly what you said, which is the reason the Brazilians had to keep changing the currencies was because the debasement was happening with hyperinflation. This is not hyperinflation. This is a slow default on the debt that's happening through debasement. And the people that are getting the most angry are the people that aren't part of the top 1%.
Because they can't own the assets.
Exactly. And so this is the other side, and this will work out, and it's global.
Yeah. And Bitcoin, the uniqueness is it's fractionalizable.
Exactly.
So put in 10% of their paycheck. However poor you are or however rich you are, you're on equal footing and offsetting the debasement. That didn't exist. It has never existed. So it makes it, which is why it's captured the world, whether it's Southeast Asia, Latin America, Africa, or New York City. People kind of, once you get it, you get it.
Yeah. Now, one thing, and because we haven't spoken in a while, I did a video on Bitcoin. It was 40 minutes. And the reason I did it is because this year, so sometimes you need a story to have a lot of news articles that are coming out. You need stuff to happen. And what's happened this year in Bitcoin, not just Bitcoin and stable coins in particular, to get the ETF launch happen to where you had 100 and change % run up leading into the event. And it still went higher in the month after. And now it's consolidated for the last 6 months.
Yeah.
That's a good sign when you have a major event like that everyone was looking for. You've had politics where they've had bipartisan issues that have made it through Congress. You have the accounting change, which comes into effect, the FASB change, which comes into effect for ownership, for people who want to have it on their balance sheet and how it gets marked to market. The stablecoin growth and the fact that Terra Luna blew up. You had all these blowups, and yet stablecoin growth, they're now the 16th largest treasury owner in the world for stablecoins. And thinking about how this is a natural part for digital transactions, the AI agents I just wrote about, and the fact that this is an accelerant, you had the options that started today, all of this when a lot of the ecosystem has still been broken down. So it's been a huge year. And then you had a presidential candidate at the conference. You had RFK Jr. say you should put it in the treasury reserves. Trump alluded to, well, we won't sell it. Whatever the case is, that is happening because a voting block in the US of 30 to 50 million users of Bitcoin or crypto in an election, every election is tight. Sometimes you have the electoral be different than the popular, which could be again this year. Every vote counts. Well, that means that crypto groups are going. And if you look at every part of it is just a major story. And it just says that it's time. And I think with copper going higher, like I said, and starting to go higher, this is the final part, is it'll be viewed completely as an AI trade for a lot of reasons. But one of them is they're tied to electricity. So
talk a bit about, which you've been writing on, talking about why AI and Bitcoin. What is that relationship that people don't yet understand?
Well, there's two parts that I think people should get. The first one is that digital payments are growing, and eventually we're going to get to the point where digital payments extend to a way that has less friction, meaning there's a time element, there's a safety element. You're going to have more and more problems. I always laugh when people are like, well, what if people hack into Bitcoin? I'm like, well, people hack into your bank every single day. Like quantum computing, it's going to be easier to hack into banks than it will be into crypto. I mean, you want to have more safety. So you want cryptography. You want something that gets more powerful. There's an authenticity side. I think fakes are becoming, and I think you and I talked about this a year ago, that where AI absolutely fits in. And I think you mentioned for this election in particular, you're just going to have a lot of deep fakes. You just don't know what's real and what's not real. You mentioned the voice thing. You're not going to be able to tell the difference between a voice on the phone that your mother or your family member that's asking you for money and AI. And so you need authenticity. You need something that proves that you're the owner of a painting, the rightful owner, anything. So that's one side. And the digital transactions, as I mentioned, is something people should really read the McKinsey report on digital payments. Digital payments around the globe are going higher. And in other countries, it's an accelerating fact that they're using stable coins more and more and more. And stable coins will be the connection. So don't think of Bitcoin as an exchange of value, but think of stable coins, and stable coins are within the ecosystem of Bitcoin. So that absolutely is going to be there. The other part is I do believe in the deflationary side. There's no way that the blockchain isn't the most deflationary. When you get rid of the middlemen, you've been able to reduce the cost of everything. And so the easiest way for the middlemen to be reduced is obviously through smart contracts. The smart contract should be done through AI agents. So if you buy a home, theoretically, all of those phone calls you have to make to your lawyer, to the insurance person, to all of these things, they all end up being money. They all end up being time. If you buy a house and the AI agent goes and does all of those pieces, you've now taken the cost down dramatically. You've eliminated most of the middlemen. That is going to be what's next. And that just leads to more need for the blockchain.
And so when I explain this agent to agent stuff, right? Now, these independent autonomous agents or non-autonomous agents, however they are, right? Let's use the house example. There's a ton of things. There's the kind of registering with the government. There's the legal stuff, whatever, however much that gets destroyed away, fine. But somebody has to pay for the compute and the electricity cost of the agent. So they're not free, but they're very cheap for sure. So now you've got micro payments because you'll need to thank the agent for doing its job by giving it not only the cost, but probably a small margin as well, because that's how the world works.
Yep.
So those fractionalized instantaneously, because this can all happen instantly, as we know from AI, it can do all of this like that. So this is a micro payment that needs to happen at instant settlement speed. Well, the only way of doing that is blockchain. There is no other way of doing it.
Yep, I agree. And again, people, I think, rightfully so, because the technology is not here yet in the way that they can feel it and see it. But with AI agents, this will change, and it'll change without them knowing. The call centers will change. As Mark Benioff said in the All In Summit interview, they asked him when call centers would be replaced, and he said before the end of the year. I mean, you'll be able to use AI agents. Now, whether or not that's the case or whether it's another year, whatever it is, you're talking about having a conversation no longer with a person who lives in another country to deal with your plane change. You're actually dealing with an AI agent who will pick up the phone on the very first time. And that's where you have to understand like the efficiency, every frustration that people have calling their healthcare insurer, calling whatever call center you make, where you sit on the phone, you can't get a human being on there, you're trying to yell representative, nothing's working. AI agents will fix that inefficiency immediately. It has huge cost reductions, but once you do it once, you won't want to go back the other way. And this is where that's why AI agents, to me, as Brian Armstrong said from Coinbase, this is the accelerant for digital payments.
As Raoul Pal and Jordi Visser wrap up their fascinating discussion, they leave us with a compelling vision of the future. From the rise of AI agents to the transformative power of Bitcoin and blockchain, it's clear that these technologies will redefine the global financial landscape in ways we are only beginning to understand. Pal and Visser's deep expertise and forward-thinking perspectives highlight the importance of staying ahead in a rapidly evolving world. Whether you're an investor, a tech enthusiast, or just curious about the future, their insights offer invaluable takeaways for navigating the coming digital revolution. What do you think will have a bigger impact on the global economy over the next decade? Artificial intelligence or digital assets like Bitcoin? Drop your thoughts in the comments below and join the conversation. If you've made it this far, you must have enjoyed the video. So, don't forget to give it a thumbs up and hit that subscribe button for more insightful conversations like this one. And if you want to dive even deeper, check out the next video YouTube thinks you'll love. Just click right here. Thanks for watching, and we'll see you in the next one.